Here we go. State of the market, March 29, 2016. Today, we started off with a bunch of news that came out prior to the market opening. So these four news items were the most likely to have affected the initial movements in the market. Now, this is mostly bad news. Personal income is down. Consumer spending is stuck. It's not growing. Trade is becoming more of a deficit, and we can see this here. All this data is summed up in one article, which was pretty good. Essentially says that growth is struggling. We have weaker consumer spending in January, and trade deficit that's widening in February. So this bad news should make the market go down. Now let's take a look at what happened. We're going to be using the SPY today. So the SPY tracks the S&P 500. As you can see, there wasn't much movement today. And if you want to look at that main story that happened as the market opened, it did shift everything down. I believe that's the beginning candlestick, if I'm not mistaken. Yes, it is. Okay, so all that news brought the SPY down about $1, not even $1, but it brought it down temporarily. And then after that, it became a little volatile. Now, we'll explain why in a second, but let's take a look at something very interesting. We got basically no volume here. There's almost no trading today on Monday. And that's rare, especially for a Monday. Usually we have low volume days on Fridays, but if you want to take a look at this volume and compare it to all the volume for this year, going back to January, here's all the volumes down here. This is the lowest volume day we've had all year. So people just weren't trading. And that's rather uncommon for March, because the low volume season usually starts in May. March is usually a high volume season, and we see that volume is actually tapered off after the market started to come back. So it looks like everybody did their panic selling, and then the market came back just slowly with a trickle of money coming in. And it's unlikely that the money was coming in from investors who sold. It's more likely that the money's coming in from governments and central banks. So that's what we got. Slow trickle upward. And we've got this, I talked about this candlestick last time. The top red, this is when things top out. So it looks like we topped out on Wednesday, and indeed we were lower on Thursday. And now we've got a slightly bearish day, but it looks like money was pumped in. And possibly one of the reasons for that is the selling of the yen. We'll take a look at the yen. FXY tracks the yen. So here's overall what's been happening to the yen. It's been dipping again. Remember, the yen is a safe currency for most people. When they have fears about the market, they'll buy yen, they'll buy gold, they'll buy bonds. But yen has been falling, which is good for the U.S. market, good for the dollar. But it's actually the dollar isn't that great right now in comparison to other currencies. Right now, the euro is growing larger, but you can see if you look at the FXY, you can see how the yen is going, and it starts out moving upward, but that doesn't hold, and by the end of the day it has dropped considerably. Something we also should take a look at during this day, so let's go back to the SPY, is we had important downward movements at around 2 o'clock, 2 p.m. So after the SPY dropped, it went back up, so it hit a support level after the initial bad economic news, slowly tapered upward, and then we had this downward trend, and we ended with a red candlestick. And I believe this was mainly due to two news stories. There was a shooting in the Capitol, and there was also bombs that were set, or supposedly set, in Times Square, and both of those occurred at roughly the same time, 2 p.m. Take a look at those news stories real quickly. So here we got a Capitol shooting. Some pastor started shooting at the White House or the Capitol, stating something about God. God sent him to do it. But we don't really care the reason. He's in custody now. I don't think anybody was hurt. But it happened at around 2:30 p.m. And around 3 o'clock p.m., we had the New York Police Department send in a bomb squad to Times Square. They evacuated Times Square. People thought it might have been a terrorist attack, and that probably sent this 2 o'clock downward spiral that ended the market in the red. Let's go ahead and take a look at one of the interesting patterns I found in the past week, but have yet to find a way to play it without, well, I'll show you why. This is the iShares Transportation Average. This is a combination of stocks in the transportation business, and as you might imagine, the transportation business is highly linked to the price of oil. But here's what we see. It doesn't really look like there's much in the past 5 days. We did have an overbought signal, and if you wanted to go short on this, you could have gone short probably on Tuesday and made a $3 gain. But the interesting thing isn't this slow downward pattern when we look at the 30-day chart. When we look at the weekly chart, then we see something interesting. IYT, take a look at the weekly, 5 days. Here we see something very considerate. Every day so far, we've opened with a gap, except for today. But we've opened with a down gap, and those down gaps have been breakaway gaps, boom, 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 in terms of the daily charts. So a nice strategy would have been, and it might be too late, it might not, I'm not sure, because I'm really not sure about the fundamentals behind this pattern. But if you had bought puts at the end of the market day and then sold them at the beginning, you could have made easily $200 per day on one put option. The problem with that is, and the reason I hadn't played that, is because IYT puts, even the best, have really low open interest. And I'm not saying you can't buy it. I mean, the spreads, they're tight enough. You could do this if you wanted to. And I'm still considering whether I want to, because I really don't know the reason behind this pattern. But you really got to look at the open interest here. These are very illiquid, and I generally do not play illiquid puts. But it looks like your best bets are these April 138 and April 140. If you look at those prices, we're pretty much at the money. And why would 138 have so much open interest and 139 not? I'm really not sure, but it could be that some people know things I don't know, and the price target for them is 138 or below. And in that case, it might be worth watching this one more day, seeing if tomorrow we have an opening, another gap, or another downward trend, and doing the same thing at the end of the market, just buying that put. But realize it's really not that much money. It's like $2 drop a day. There's probably better choices. Still, we have this short signal or sell signal, and it looks like we're out of the overbought region, so it might be too late for this. But still, it's quite an interesting pattern. And if you want to go ahead and look at the same thing for oil, USO tracks oil, we don't really see a pattern. So it's hard to say that that trend we just saw is linked in any way to oil. And I believe if we ran a correlation, which I can do but I don't want to do, on these two tickers, we won't see any significant correlation. So we did have these two drops on these 2 days and on this day, but this one quickly recovered, and today we didn't have the drop in USO, and you'd think that they would be inversely correlated. If they were correlated, a surge in oil prices would probably drop transportation stocks. We didn't see that. Oil, by the way, is pretty volatile these days. Might be good to play straddles or strangles on them. I stay out of oil overall, unless I'm like previously I shorted some oil companies because it's clear that they would go under, but right now I'd rather just stay out of oil. Let's take a look at the dollar. Alright, so here's the dollar. Let's take a look at the weeklies. The dollar has been moving up, and if you look at the yen, the FXY, you're going to see pretty much the inverse of this pattern. But the dollar had dropped today, and that's probably because of weakness comparing the dollar to the euro. What is the ticker for the euro? Euro. Come on, give me something. Euro ETF, ETN. Nothing. I forget what it is. It's maybe FXE. Oh, there you go. So yes, the euro had an up gap today. It jumped, whereas the dollar fell and the yen fell. So the euro is getting stronger. FXE again. I never trade this. Whereas the dollar and the yen are getting weaker, at least today. Now, what about bonds? Bonds are slightly up. If you want to look at the weeklies, bonds are pretty much as volatile as crude oil these days. We've got gaps every day. It's hard to tell which way that gap is going to go. It's looking weekly wise that we are kind of oversold here, but TLT, but it doesn't look like we are oversold in terms of the monthly. So this is something I'd see out of. Again, when you pull back and look at the monthlies, we don't see much change, but the weeklies are very volatile. So that's something to note if you want to trade bonds. You do have opportunities here, and oddly enough, bonds are volatile enough to the point where you're seeing a dollar movement per day, which if you correctly predict, you can make $100 per option. So it might be something to look into if you are an expert on that. As for gold, we are pretty much trending sideways, and we have been for the past 3 days. Nothing in the news today really affected gold much. Overall, gold is pretty much stuck at this point until this gap begins to fade or widen. So the question is this gap a breakaway gap or is it an area gap? And at the moment, I'm siding with area gap. The only indications that we have that it might be a breakaway gap is this high volume, relatively high. It's really not high enough to immediately flag this gap as a breakaway gap, and the fact that the price has moved a bit further than where it was trending before. So we might now be below a support level, which means it's now a resist level. But I think this is an area gap, and I think this is going to fill eventually. So if you're going to play gold, your price target would be about 118. I'm still long gold. I believe it's going to head upward. I'm hedging against the market going up again. I am banking on the market falling. So I'm actually long gold, short QQQs. And there we go. The dailies for gold didn't move. No, didn't really move. The VIX. I'm also long the VIX, by the way. We see the VIX being pumped, I think pretty much every day at the end. Past 2 days, it's attempted to be pumped. So this didn't really work out, but I mean, we pumped it up at the end of the day. Not we, but somebody did. And no, this is the beginning of the day. So VIX was up at the beginning of the day. I guess today's VIX movements were based on the news. So we saw a jump based on the poor economic news, but that slowed down. And then it started to move up again during the afternoon when those shootings and bomb news articles came out. And then at the end of the day, somehow it was pumped up, possibly in response to the SPY being shoved down. Not really sure what's happening there. A lot of this is high frequency trading you're seeing. Remember, 50% of the trades in the market are high frequency trades. So if you want to kind of tease out high frequency trades from fundamental trades, from investments, you're gonna have to pull back and look at monthlies, because the high frequency trades will move in the same direction as hedge funds and investors. But when you look at the dailies, you see it's very chaotic. Only when you pull out do you see a trend. Now, the VIX, I have said many times, is always safe to go long or short on. But if you want to make a lot of money from a single option, you're going to have to go long. The VIX doesn't really fall quickly, but it does rise quickly. And I see us at a very oversold level. I think it's going to spike. How much it spikes is the main question at the moment. Let's see here. All right, so I think we're done with the market in general. Let's look at some individual stocks and some possible trades. AT&T is at a relative high. What's interesting here is this candlestick pattern. This is called a bullish deliberation. It's when you have a green candlestick and then another green candlestick much smaller above it. That's a deliberation. What it means is investors really don't know, or traders really don't know which way it's going to go. They're fighting it out right here. They're disagreeing whether it's going to continue upward or whether it's going to fall. And roughly 80% of the time it continues upward. So this would be a good long. But the other 20% of the time when it doesn't go upward, it tends to fall really hard. And that candlestick pattern is called a evening star. If that happens, you've probably lost a considerable amount of your option if you're playing a call option, and you've lost a decent amount of your stock if you're playing stocks. Now, the reason I'm thinking this is going to be going upward with more than 80% accuracy is not just this, but also this. So we have another candlestick pattern called a bullish engulfing. That's when the green candlestick eats up the red candlestick. That predicts a higher trend, and we saw that today. And then now we have a deliberation, and that typically goes up further. So I'm thinking we are not looking at the top yet for AT&T. By the way, AT&T and Verizon are going to fight it out for a contract called the FirstNet contract. I've written about it extensively on Seeking Alpha. You can seek that out. Whoever wins that contract is going to get a lot of money from the government, but that's a long-term agreement. So if you're looking to buy a dividend stock in the wireless industry, you might want to look at AT&T or Verizon. Another one I want to look at is ALDR. This is a biopharm company that recently had its migraine drug pass a midterm trial. That's why it's up by so much today. If you want to look at daily trading, ALDR, again, remember a lot of this is high frequency trades. Most of the important trades are made at the beginning of the day, and the end of the day is a lot of high frequency trading. Most of the action is usually in the beginning, before the afternoon, when traders go to lunch, and then everything pretty much settles down. Now we saw a huge spike and then it trended sideways. This could be one of those gaps that sets us into a new sideways trend like this, and in that case you might want to look into calendar call or calendar put spreads, or you might want to wait a couple of days and watch this and see if we have those candlesticks. If you've taken the gap game plan, you've got a list of candlesticks that show you after an up gap what candlestick patterns are likely to be breakout patterns. I'm thinking that this will probably be a breakout and we won't see a sideways trend, but really you should follow the gap game plan strategy and watch it. The reason I'm thinking this is a breakout is, first, a red followed by a green candlestick pattern typically is a breakout. We also have a very high volume. There's no volume previous to this day's volume that even compares in terms of size. And finally, we've moved very far out of the previous price range. We haven't seen a price this high since the last month. Those are all indicators of a breakaway gap, which means that the stock will trend upward. So if you want to get into a biopharm company, this could be a good time to buy into ALDR. But please wait a couple days and see if you can find a candlestick pattern in the following days that confirm that this is actually a breakaway gap. Finally, AGN. We've been trading this in the Copy My Trades program, subscription program on my site. Just go to my site to see what that is. We've been trading this upward. We've been taking long positions because this is an arbitrage play and eventually it'll go up to 330. So we want to trade within that direction. We want to trade upward, and that's what we did on, I believe, on this day, and on this day we held. So we moved up from 270 to about 280, so that should be about $500 per option. And I told people to get out on this day, and indeed that was the time to get out, because now we are looking at a bearish engulfing candlestick. So we'll probably go down to another low, and that's going to be the time to buy in again. Now, when that low occurs is either when the stock is oversold, which is not looking like it's going to happen in the short term, or it's when we see another good candlestick pattern like we did here. The reason we got on this day is because of this bullish engulfing candlestick pattern, which I just explained. So bought at the open, sold at the close, bought at the open, sold at the close if you're day trading, and bought at the open and then sold on this day if you're not day trading, if you're swing trading. So again, if you really want to be risky and bet against the trend, you could buy puts on this. I wouldn't recommend it. Also, we have an area gap up here that's eventually going to fill. It must fill if the arbitrage play is correct. So that's it. Again, T, decent long, ALDR, possible breakaway gap, and then AGN is an arbitrage play that we can buy the dip on once it hits bottom again. That's it for now. If you like this video, please click like, subscribe, and I'll make more videos of this type. And if you have a question or you want a certain video done, just put in your request in the comment section below and I'll get to it.